This is our blog video for February 15th, 2013, and I'm going to go over our currency indexes, how to set them up if you want to do it yourself in a custom way. Just first start with a euro-dollar chart. That automatically sets the start-stop time to 0. That way you don't have to worry about that in the future. Right-click on the chart, go to Add Script, and go down to FX Currency Indexes. And once you add this to the chart, it's not going to do anything until you type in star USD, star EUR, or any of the 8 main pairs. So we have star USD, star JPY, star EUR, star GBP, AUD, NZD, CHF, and CAD for CAD. And what this does is it basically creates an artificial index of the US dollar. And the new one that we're going to be releasing soon is going to have the containment bands on there. This is the index's high value of the previous day. This is the index's low value of the previous day. This is the hourly moving average in gray and the 15-minute moving average of the index in green. The point of control where most traders had positions in the US dollar yesterday is right here. And these are all filters. Above the previous day's high and especially above the hourly and 15-minute moving average is likely to trend up. This is likely most days to be a resistance area, as is the previous day's high. Anytime you see breakouts like this, with a little wedge pattern, you got a nice beautiful trend line all the way up here. That's a very high probability trade. And basically knowing that the dollar is stronger today than it was at its maximum point yesterday is a very big deal and improves your trading. Once that's on the chart, right click on there, go back to Add Script. And this tool works on any time frame chart. 5-minute, here's a 30-minute dollar index. Here is a 60-minute. And when you get over, I think 60-minute, it doesn't draw the containment bands anymore or the hourly. So you can see a 240-minute, but it's not going to put some of those bands on there. This also works for daily and weekly charts too. Period D for daily, enter, and period W for weekly. As you can see, the bands are off the chart. This is a 4-hour chart of the US dollar. So you can get a really good feel for the longer term trend of each individual currency. And at a glance, pretty much know if the trend's up or down or likely to reverse. Right now it looks like, because it wasn't able to get back up to the high earlier this month, if it breaks down from here, it's a pretty good shot of going back down to the 101.25 to 20 area. If it breaks that, 101 is the next support area. You can very quickly and easily see that on the chart, and these are very key levels to be looking for. If it breaks out to the upside, the next resistance area is 101.96 to 102 of this chart. So let's go back to a 5-minute chart, and we're going to, I'll just get rid of all those lines on there. We're going to add one of my favorite indicators that measures intensity, FX trend intensity, and this is a new one. I took the name of an older indicator that's vastly inferior to this, and the new statistical model gets put in here in its place. And this shows you how strong or weak it is. Generally, 40 levels of 40, green are moderately strong, red are moderately weak, and plus 80 readings almost always will continue up another wave. So it wasn't extremely strong today. And then you right-click on it, and this is 2 new indicators I've come up with, which is very likely very similar to the pivot score daily and weekly, although it uses 3 different methods for measuring this trend for daily and weekly. We don't have monthly for various reasons. And like you can see on here, you can weight each one. The old pivot score, a statistical daily and weekly value area, what percentage of dollar indexes are above their value area, are they above the value area high or below the value area low, and then this is the close of the previous day and previous week, measuring intensity on each of the dollar currencies compared to its average daily move. So this one gives it 40% weight, 40%, and 20, and you can change that however you want, play with it. I would give a smaller number to the closing weight. So you add that daily, add this weekly, and you can clearly see the weekly trend's up. The daily trend shifted up right around here. It also broke from underneath above the hourly. And basically, you want to look for events like breakouts from below to above in the direction of the longer term trend, and preferably the real-time trend, the daily trend, the weekly trends in your favor. And once you set this up once, you can just simply right-click on it, and we can take a look at some of the other currencies and find a weak one to trade it against. It's that simple. It does a lot of calculations, so it might take 5 to 20 seconds to come up. This one was trending down until about 8, and then it got really strong, as you can see, but the weekly trend's still down. Let's look at the CAD. So this one has a daily trend that's down and a weekly trend that's down, and it had a false, pretty much spent the entire day except for 2 hours above the hourly moving average, and then it broke down right here, and also you got a pullback right to the hourly and the previous day's low. These are two wonderful places to sell it. And you saw the dollar was strong and the euro was strong, so basically all you do is look to buy the strong dollar versus a weak CAD. I'll bring this on here. And basically, we're looking for a couple patterns on the chart. One is a sideways rectangle breakout, and another one is a pullback trade. This is a very tiny pullback, flag pattern, and then this is a deeper pullback. Oops. This is a deeper pullback right here. And you also have, you can use a 5-minute chart, 2-minute chart, or what I prefer is a 5R chart. This is 5 pips per bar, and it's going to show you a lot of times, higher probability type trades. If you get a 2 to 5 bar pullback in a strong currency, and 1 bar green, in other words, 2 red bars, 1 bar green, all you do is just simply buy when it goes 1 pip above that bar's high, and you put your stop 1 pip underneath that bar's low for the tiniest of losses when wrong. And the key to trading is small losses, big wins. We use range bars. You always limit your loss to a ridiculously tiny amount, and you can draw your fibs on the previous swing to get an idea of where the next profit target is. This is your profit target. Even if you got out of this trade right here, you can see your win was probably 4.5 times bigger than your loss would have been if it hadn't worked, right? I mean, it's that simple. Anytime you make 2, 3, 4 times more wins than losses, so let's say you went long there, you lost 6 pips, went long here, and you made 15. So well, guess what? You netted 9 pips on those 2 trades. And the farther up a currency goes, typically I will wait for a deeper pullback. And you might want to draw your fibs on the entire wave and at least wait for a 24 to 38% pullback. So this is the safest place to begin looking for a pullback, and usually it's going to pull back to the 38 or 50. If you use that as a safe place to get in, you're going to avoid a lot of unnecessary losses. So that's the dollar CAD. Now remember, the EUR got really strong after about 8. And anytime a currency spends 5 to 8 hours or 10 hours underneath the hourly and then breaks out, it's likely to continue. Now the only downside here is the weekly trend was down. If the weekly trend was up, this would be even a higher probability. But we have a strong euro, weak CAD. Remember the CAD was weak. So the euro CAD at 8 is a good one to buy. Now, if you missed that 8 o'clock breakout, you have a nice little flag pattern right here to get in. Or if you go to a 5R chart, you're going to find an even higher probability entry a little bit after 8. In fact, you see this? With this chart, you can actually have gotten in right around 8:30 when it's going sideways. Anytime you see an up, down, up, down, up, down type rectangle pattern, you can get in 10 pips earlier and save, basically you make 10 extra pips, and you have a nice little entry here right after the initial breakout, and then you want to wait for a little bit more of a pullback. Remember, if you draw your fibs on there, you avoid unnecessarily short-term losses, right? This is the place where it becomes relatively safe to start looking for a pullback and buy, and this is where it's ultimately the safest. Now, if you got into this trade here, obviously it didn't work. You might have broke even on that trade because it did go up a little bit, but this is a much safer place, and it went from 30 all the way to 60. Even if you got out of it right here, you made 10 pips and you only risked 5 or 6. And so that's the key and the secret to how to use our indexes. You want to buy the strong ones versus the weak, and sell the weak ones versus the strong. Let's take a look at some of the other pairs and try to find another strong one to be buying against the CAD. Let's see the yen. Now earlier today, this one was strong and it had a nice pullback to the hourly. Pretty high probability place to buy because the longer term trend is up. You wait for it to either go sideways at the hourly or start up, or in this one had a false break in and came back above, so you're looking around 210 there to buy it. More than likely, the CAD yen, and I'll put this on a 5-minute chart just so it loads faster, at 2 o'clock would have been an excellent one to be selling. And as you can see, that's exactly the case. It fell from around 92.60, 92.55, all the way down to 10. 45 pip drop. Wasn't the smoothest trend, but anytime you have one currency that's super strong and the other one's super weak, you can always just simply draw your trend lines over the bars high, and when it fails down there, get out of the trade.